See, I knew I was right not to buy that TV. Look at it. It's on sale. Discount. I think I'm gonna wait till the price goes back up so I can buy it. You see how stupid that sounds? I'm making a point. Stay with me. Welcome back to the channel that simplifies the stock market. In this video, I'm going to show you how stock market declines or crashes present great opportunities for you to go in and buy stocks at great prices. So that when you see this, you don't get scared and think, I should run away from the stock market as quickly and as far as possible. But instead you think, stocks are on sale, I need to go in and start buying. Now as an example, last year, 2020 around March, the stock market had a major decline due to the COVID pandemic. And this presented a great opportunity for you to go in and buy stocks at great prices. So in this video, we're going to talk about how you could have used this decline to your advantage and use it to put a lot of cash in your pockets and increase your wealth. Now, in order to demonstrate this, we're going to look at one of the companies in my portfolio, OneMain Holdings. And I've made a video recently where I talked about this company. So if you want to go back and check that out after you watch this video, then I'll leave a link to the video in the description below. So let's bring up the price chart of OneMain and go back in time to March 2020. That's the rewind sound effect. Okay, so it's now March 2020, and we get the announcement that we're going into lockdown and the stock market takes a huge nosedive, a big decline. So just as a comparison, this is what happened to the S&P 500 in March of 2020, and OMF fell right in line and had a decline around the same time as well. So let's see what OneMain stock price dropped to during this time period. Okay, so we see that it dropped to $15.27. Now, of course, there's no guarantee that you would have bought it exactly at its lowest price of $15.27, but I'm going to use this price to show you just how much cash you would have made and how great of a return you would have had if you chose to buy it at this price instead of being scared and saying, whoa, the stock market is declining, I'm staying away from stocks. So we're going to say that you bought OneMain for $15.27 on March 30th, 2020. Now, OneMain pays dividends, and if you watch my previous videos, then you already know that the dividend is the cash payment that the company pays you for owning the stock. So now let's look at how much cash OneMain would have paid you from March of 30th, 2020 to today. And for that, we can go to dividend.com to see how much cash OneMain has paid to its shareholders in the last year. Okay, so I'm now on dividend.com and I have OneMain's dividend payout history pulled up. And you can see right here from this chart, if we would have bought OneMain on March 30th, 2020, we have to exclude these two dates right here because this is before we actually bought the stock, and we include all of these. So you can see the date that they paid the dividend and how much they paid out, and then also the declaration date. So you can see on June 12th of 2020, they paid out 33 cents. On August 18th, 2020, they paid out $2. August 18th again, they paid out 33 cents. Then November 17th, 2020, they paid out 45 cents. Then February 25th, 2021, they paid out 45 cents. And then the 25th, same date, they paid out $3.50. So we can just add these up to get the total cash payment that OneMain paid out over the course of the last year. So when you add all of these up, they equal up to $7.06. And this isn't $7.06 total. This is telling you that OneMain will pay you $7.06 for each share of the company that you own. So for example, let's say that you bought 20 shares of OneMain Financial at $15.27. So times 20, your total would be $305.40. And then you also multiply this cash that they would have paid you times the 20 shares that you own. Because again, this is $7.06 for each share that you own. So multiply this times 20 and you get $141.20. So again, just to make this clear, you bought 20 shares of OneMain or 20 pieces of OneMain for a total of $305.40. And then over the course of the year, because you own these 20 shares, they paid you a total of $141.20. So today you would still have the 20 shares that you bought a year ago, the 20 shares of OneMain, plus you would have the $141 that it produced for you over the course of the year. I'm going to get rid of some of this stuff so it looks a little bit more clean. One second. Okay, cool. So we now have the cash you would have paid to buy these 20 shares, and then the cash that you would have received over the last year. And now we can look at what kind of return you would have had just off of dividends alone. Watch this. You can figure this out by taking the cash you received, $141.20, divided by the cash that you paid, $305.40. And you multiply that figure times 100 to get the percentage. And that equals 46%, 46.23%. Listen, I know my market's kind of going out on me, but subscribe anyway.
Keep procrastinating over and over. No, do it right now. Why are you making it complicated? It's easy.
So this tells you that if you would have bought OneMain on March 30th, 2020, you would have earned a 46% return on your investment. Now, this 46% return is just off of dividends alone. It doesn't even include the fact that the price has gone up from $15.27 a year ago to where it is today at around $55 per share. So I'm going to erase this to make some room and then just write this up top so we can remember that we got, or we would have gotten, 46.23% return off of the dividends. Now, this is how we can figure out just how much the price has gone up in the last year. You take the end price, or what the price is today, $54.99, and you subtract out the beginning price, which you bought it at, $15.27, and you divide that by the start price, again, $15.27, and then you multiply this times 100 to get the percentage, and this equals around 260%. Now, 260% in a year is amazing, but just to be quite honest, I don't really bank on this figure just because you can only get this 260% if you sell the stock. But again, if you sell the stock, then you no longer own it and you no longer receive the cash payments that it will pay you for being an owner. But just to give you the total, if you bought OneMain a year ago at $15.27 and you held it until today and you chose to cash out and just sell your stock, then you would have had 260 plus 46%. That's over 300% return on your money in 1 year. So now, of course, you can make the argument that hindsight is 2020, and there will be no way that you could actually know that the company would have paid you $7.06 over the course of the last year. So how would you know that you should buy the stock when the stock market declined? It all comes back to this. You need to understand the business. You need to look at the company's financials, and you need to invest in companies with great financials. And this is where we look at the business and its financials and say, okay, the stock price dropped by 68%, but did the revenues drop by 68%? Did the earnings drop by 68%? What about the free cash flow? Did it drop? Did your balance sheet deteriorate? These sort of questions. And you would get updated on the company's financials every 3 months in a 10Q report. So then you just follow along the story and say, okay, are revenues dropping off? Are their financials in general dropping off? Or is everything looking steady? So let's quickly look at what the company's revenue, earnings, and free cash flow did during this time period. So now we see that the stock price dropped by 68%, but the actual business didn't drop off at all. I mean, it wasn't picture perfect, but it was a solid business. And remember, if you would have bought it, then all along the company would have been giving you dividend payments periodically, which is a good sign because if the company was in trouble and didn't have the cash to pay you, then how would they pay you? And OneMain also had a solid balance sheet before this time period and during this time period, but I'll go over the balance sheet in more depth in a later video. So a couple different points to end this video off. One, if the next opportunity presents itself where there's a huge stock market decline, don't panic, don't be fearful, but instead go in and actually look for some opportunities to buy some stocks at great discounts. But you first have to evaluate the business and look at the company's financials. Don't just buy any old company in the stock market just because their price is down. It doesn't work like that. And point number two, the final point to end this off, there's this concept called the K-shaped recovery. And this basically says that when events like the pandemic and the stock market decline happen, when we start to recover and come out of it, the rich get richer and the poor get poorer. And this isn't the only reason, but the main reason behind this is quite honestly because when events like the pandemic and the stock market decline happen, then the rich actually go in and buy the stocks and the assets at these low prices, and then the poor, they don't, or they sell off their stocks and their different assets. So when things start to recover, the rich end up better off and the poor end up worse off. Now, I need you to understand that this isn't a conspiracy on behalf of rich people. It's really more of a lack of knowledge on behalf of those who don't have as much. When you know better, you do better. So the next time an event like that happens in the future, don't be scared. Don't be fearful, but actually go straight into it and look for some opportunities so you can be better off as well.
You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific, 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen.
Hey, Mr. Rich, they're coming to get me because I've been sharing all the secrets. If I don't make a video next week, you know what happened to me.